Hi, everyone. My name is Phil Blancato. I'm CEO and president of Vladimir Thelman Asset Management, chief market strategist for Mosaic. Welcome to Monday, June 15th. All right, so we got a whole bunch of stuff to talk about. Hopefully, you enjoyed the podcast with my daughter last week. If you didn't get a chance to listen, that was a fun one for me personally. I think she did a great job. A couple weeks before that, we had a nuclear scientist on. That was really kind of explaining the future of power, and why I thought that was, even more interesting. I mean, the idea of where we're going to get power from in the future as we need more. Fascinating stuff. But today's just little old me, back to normal. So hopefully I won't bore you to tears. Back from my trip to Japan. Never been to Japan before. Luca and I went over for a couple of days, and I guess the best I would say is it's a fascinating country. Tokyo is clean as can be. When Uber drivers pick you up with white gloves and they're dressed generally in suits and the cars are immaculate, says a lot about the country. But on the other hand, there's no garbage cans anywhere. And you can't get, if you drink a bottle, if you buy a bottle of water, there's nowhere to deposit the water except for the machine you bought it in. So it's very unusual. Good luck trying finding a public bathroom, by the way. Not easy unless you're at a very touristy place, but still a fascinating country. And it's kind of like what you would think, the stereotype. There's sushi everywhere, every restaurant. Good luck trying to find Italian food. I wanted to try pizza in Tokyo. I never got around to it because supposedly there's a Japanese twist on Italian pizza. I probably wouldn't have eaten it anyway, but I was tempted. Anyway, we had a wonderful time. Got to see Mount Fuji, Lake Kokone. I got to go to Kyoto. And for those of you who watch TikTok, there's a TikTok video of me in Kyoto helping my daughter sing a song about dads who go to Kyoto. It's kind of goofy. And then I got to go to Nara, where I fed little deer and got to see the biggest Buddha in the world. And then finally Osaka, where it's right out of a Japanese old school karate movie. The streets are still littered with street carts and food carts, these overlapping buildings, wires in between a building like you'd see in an old movie, the lanterns coming into the street. It felt like you stepped back in time. Amazing country, great time. And even though I had to deal with a 13-hour flight back, I left Japan at 5:30 on Saturday night and landed in New York 5:30 on Saturday night. Go wrap your head around that. I guess up and over the world. But certainly a lot of fun, great time, and something I'll never forget. Great dad-daughter moment, but also a country that was highly on my bucket list and got a chance to tick it off. I want to go back. I want to go ski there. I'd like to see Hiroshima and Okinawa. The beaches there are supposed to be amazing, but also for the history there as well. Anyway, great trip for me. My garden update, booming. All that I put in some pretty cool. It was a mushroom mix. It was peat moss or dirt that was basically from where they grow mushrooms, and it's just loaded with nutrients, and it's just fuel for the garden. The tomatoes are exploding. I've already got a very significant crop of tomatoes on the vine. I'll have tomatoes looking very early. Sadly, my fig tree died. That's a story for another podcast. Not died, it's having to grow from its roots, so I'm not going to get a lot of figs this year. Although I have a friend I'm going to steal from his plant, but that's another story for another day. So those bases are covered. And you know what's going to happen in just a few days? It's hard to believe it's already here. You know, we're coming up on the longest day of the year, the summer solstice. My favorite, second favorite day of the year. My favorite is the shortest day of the year because every day after that, things get a bit brighter. And the long summer days of the longest day of the year, all right, I just really enjoy them. I like the winter. I love to ski, but it's something about those long nights. I've only gone on 2 late night walks this year. I'm disappointed. I haven't had the time to do it. And I did work outside my house yesterday all day long, planted flowers, put in mulch. I was a little late, a little busy. I finally got around to doing that. But I noticed last night it was just a beautiful night until we had this gigantic thunderstorm come blowing through that just, wow, it was powerful. So that little goofy weekend in that way. But home, back on the ground, happy to be with you all and getting back to a bit of normalcy. Why not? It's time to do that. And here we are. Let's just talk markets right out of the gates. Things are ripping higher. And why? Well, it really does start off with SpaceX. At the end of the day, the optimism around SpaceX is profound. There's no way of sugarcoating it. It certainly met the expectations of what everyone thought it was going to be. And if you're not familiar with SpaceX, I can't see how you couldn't be at this point. But if you're not, it's another company launched by Elon Musk. And the trifecta of companies that he now owns, really more. It is obviously he owns Tesla, and we all know what Tesla's done from a stock price and the cutting edge version of Tesla. And over the years, it's had its ebbs and flows. It's not. I don't think it's the creative car company it once was, because so many other companies do what they do. But at the same token, it's hard to deny what the man has done. Certainly, I think that that's pretty powerful for sure. The second thing, the second company is Starlink, and there wouldn't be the war between Russia and Ukraine wouldn't exist if it wasn't for Starlink. The ability to get internet communications anywhere in the world at any time at lightning speed is pretty amazing. And now the third is SpaceX. Now Starlink will probably roll into SpaceX, and why that matters is because that's where they're making money right now. I don't know if you've been on a United plane recently, but not all of them, a handful of them have actually Starlink on the plane, and it's just incredible. I mean, the speed of it is something to behold. In that when you're using it, you look at how fast you can use the internet on a plane going 600 miles an hour, and it's like you're in your living room. So that's a big revenue driver for it. And then finally, SpaceX, who is in the business of launching up rockets, releasing satellites, and bringing those rockets back down to Earth at a very low cost. And that's just today. And then tomorrow would be data centers that it'll put in space. And the reason why data centers in space are interesting is because you don't need to use any power, obviously, and you don't need to use any water, and you don't need to cool them off because you can use solar power from the sun, and space is cold. So that's the other idea, that you use some sort of SpaceX satellite technology to be able to send data back and forth. So this company came out, and what was different this time around is that SpaceX, well, normally we've gotten accustomed to companies that are staying private up until a point where they get to $1 billion, $2 billion in size, maybe a bit bigger, and then they become public. And the reason why they go public is they want to sell stock of their company shares. You buy the stock, they get that capital, and they become a bigger company. And as they grow, they issue more shares and raise more money, and the valuations go higher. This was different. SpaceX came out at what was 1.35 trillion. And then immediately, because of the euphoria around Elon Musk and what this is, it's a company that's probably 10 years ahead of any closest competitor, jumped all the way up to $176 a share, bringing the valuation to 2.2 trillion as of Friday's close. And now today, the last I checked, it's up another 8% of this morning. So we're probably closing in on about $2.5 trillion, making it now either the fifth or sixth biggest company in the world. Just like that. And why this all matters is because we've never seen anything like this before. So I think it's quite fascinating. And just as an anecdote, Elon Musk being this brilliant guy, call him what he is, he's now a trillionaire. I'll give you a fun fact. If you took a trillion pennies and you stacked them on top of each other, you could make a line or a stack from here to the moon and back twice. That's pretty cool, right? That's how much money Elon Musk is worth when you think about this, because of what he's done in creating SpaceX. And I won't take a ton of time on this. I did a short little video on it. You can catch that as well. But the last thing I'll say about SpaceX is it's something we need to watch and understand, because this is the first of other companies that are going to do this. Anthropic, right behind it, is probably another $1 trillion AI company. And behind that is probably OpenAI, another potentially $1 trillion company. It puts the United States so much farther ahead than the rest of the world. There is no Anthropic or OpenAI or SpaceX. There's no Micron technology. There is no Google or Meta or Apple or Microsoft in other countries. It really separates us from the rest of the world in a way we've never thought of before. But what's also interesting is that because this company went big at this size, anybody who was an early investor took some money out. They're becoming millionaires. People at places like Barron Fund, I've talked about that fund. The people who work there are now multimillionaires. People at SpaceX, multimillionaires. So you've minted a whole new crop of them by waiting longer to take the company public. And because of the euphoria around the name, it's become this gigantic company. And it will be interesting to see, because it's probably going to have a loss of the first quarter of around $4 billion. But nobody cares what it's doing today. It's about the future expectations of what this company can bring. So there's a whole conversation out there about how you should buy it. Do you buy the stock or do you buy an index? As it gets added to different indexes, is that a positive or a negative? To not bore you with those kind of details, I don't think they're terribly important. If you want to own SpaceX, go buy the stock. You can go buy the NASDAQ. It's in the NASDAQ today. Eventually, we'll get into other indexes as well. And I do think it's a company that is really doing something that we've never seen before, based on when it became a publicly traded company and what it does for a living. And if you roll Starlink into SpaceX and you roll Tesla into there, this is maybe it will be the biggest company in the world by a lot. So A seminal moment, a unique moment, a moment we need to embrace and watch. I'm a little concerned about one thing that I grew up in using diversification as a way to minimize risk in a portfolio. And what's happening is so many people just go buy the S&P for 500. For example, you may not know about this, but the Vanguard VOO, which is one of the first major indexes that ever existed in the world to mimic the S&P 500, is now in and of itself above $1 trillion in assets. So that means in that $1 trillion, if 60% of the index of the VOO is going to be in these top 12, 13 mega names, that means you're no longer diversified. It means VOO will have $700 billion in Meta, Google, Microsoft, Micron, Tesla, SpaceX, and so on. The Magnificent Seven, plus a few new entries. So it really is kind of fascinating that we're seeing this heavy concentration in indexes. Heck, a SpaceX has sat at the different indexes. The stock probably, not definitely, you never know, goes higher because more money can be more money gets into it. And as the months go on and more shares come to the public because people who held them before the offering are allowed to sell them, that'll make it even more interesting. My point is, you won't be diversified in an index anymore. So you're really going to have to take your time and understand what it is you're buying. Because the idea of buying a passive index of today is nothing like the passive index of 5 years ago. And that's important because that's where things like this podcast are going to matter. We're going to help you recognize this. If you're managing your own money and you think you're just going to go buy what happens if one of these names doesn't do well? I mean, we've seen this movie time and time again. The top 10 stocks of 10 years ago are not the top 10 of today. So what if the story changes? And I think that's very important to know that AI is infallible. We're always seeing a pushback on AI. Data centers not wanting to be built in my backyard and people worrying about losing their jobs. And I think some of that's far overblown, but it's real. So what if we stop using it less? What happens when universities and high schools around the country go back to using a paper form for you to fill out your test scores and you're doing it in class with a proctor again? Excuse me, because they're worried about cheating on AI. Your homework, for example, all written, not on a computer. I mean, we may have to go backwards to go forward. So my point is, nothing is ever permanent, and I think that is a very interesting point in time. Watching something I've never seen before, but at the same token, being aware of that, you know, yeah, it's different this time. It really is different this time. I hate to use those words, but we've just never seen a company go public at this size. That's my opening salvo. Something to think about. I used to watch Arsenio Hall back in the day. I don't know, he was an old comedian, but he had this one tagline that reminds me of this moment. He used to put his finger in his temple and go, "Things that make you go, hmm." This is one of those things that makes me go, hmm, because fundamentally, you wouldn't buy SpaceX. It doesn't make a lot of money yet, and it's loaded with debt. But it's one of the biggest companies in the world, could get much bigger, and has the potential to change the way we live. What if you launched 1 million satellites a year every year and you have full connectivity at any place, anywhere in the world, and you can have data centers in space which could educate anybody at any place, anywhere in the world? I mean, that's in the simplest of form what this means. So it's quite powerful and quite fascinating. Let's watch it together and figure it out. Economics. Interesting week last week in economics. What we saw was we got CPI last week. And it ties into the other big headline this morning, which I'll get to in just a second. So we had inflation data come out last week, and it was somewhat meaningless. We saw headline inflation come in hot. CPI was up 0.5 month over month when you include energy and food. And it put a reading at 4.2% year over year. That's a hot number. We haven't seen that in a long time. But the core number, when you take out food and energy, was 2.9%, up 0.2 month over month. Well, that's a pretty good number. It's below the 3% number that we want to be at. It's not the 2 yet, but certainly it's on its way there. So when you think about that's a big deal. And then we saw producer price inflation come out. And that was even hotter, up 1.1% month over month. That's a huge number. 6.5% year over year, beating the forecast of 5.7. Some of the fastest growth in what it costs to make stuff in a long, long time. But core PPI was more moderate, only up 0.4. So when you take out, again, energy and you take out, food doesn't really play into that. It does to a degree. It's about 4.9%. And that's below the expectations of what was supposed to be 5.4. What all that mumbo jumbo means is when you put in the price of oil into inflation, things look terrible. When you take the price of oil out of it, they don't look that terrible. And why? Well, I mean, you might sit there and go, well, that's just stupid. Why would you look at this from a standpoint that you're not including oil in the price of it? Well, because if you look at the amount of oil we consumed in 1970, the EU was 56% of their energy was from oil. The United States was 50%. Guess what today? Today it's just about 38%. So we don't consume as much oil as we used to. So why is it super relevant? When you take out the volatility of oil and gasoline, because it does go up and down normally in every single month, well, then suddenly you have a scenario where you got to look at what the real spending in our economy, which is not necessarily the core of of how we spend our money. You think about it, we're not going out buying oil every single day. And then there's the other big headline. The other big headline clearly is that there is a peace agreement on the table. And as of now, the president, and we've seen a lot of this back and forth, a lot of kind of meandering along as to whether it's real or whether it's not. But according to the premier of Pakistan, who was the primary negotiator, this thing is it's done, and they're going to take 6 months to figure it all out to get to be the make sure that everybody gets what they want out of it. But as of right now, I'm looking just right at the markets right now. Current WTI, are you ready for this? $80 a barrel. Brent crude, the global price, 83. That's down from 110. What's going to happen? You're going to see your gas prices fall by 20% in the next week. And what it means for the consumer, relief at the pump, and then sentiment, much better. Because if you're invested in markets right now, the S&P 500 is near an all-time high, the Dow near an all-time high, the Nasdaq near an all-time high. They're just very close to it. And you're going to pay less at the pump. You suddenly went from a wall of worry to no worry at all. Fascinating. And go one further. What if, in fact, oil does go back down into the 70s? Now, I love all the headlines. My gosh, in the last 6 months, there's been all this noise about, oh my God, and once the strait gets open, they're still going to have higher oil prices for longer. Supplies have been whittled down. You're not going to get things back online fast enough, and on and on and on and on and on. Well, oil's forecasting, that's just not the case. And what happened during this kind of issue, there were really a number of reasons during the conflict that kept oil prices low. Countries used up their reserves, especially places like China. Countries got more efficient. They didn't burn as much, places like the Asian Pacific Rim and the Middle East to a degree. There were ships actually getting through secretly at night. There were ships going through that took off their transponders and were escorted through the straits. And the U.S. and Venezuela produced more oil. So we do know that the reserves at some of the big hubs are running low now. So unless this thing did get resolved, it could have become a problem, but that doesn't seem to be the case right now. So for all the hullabaloo that was about oil for longer, regardless if this thing gets resolved, and there was going to be a toll to go through the strait, which is going to make oil prices higher. It's amazing how the headlines, once again, may have gotten it completely wrong. Completely. The latest headline now is that SpaceX, as an example, don't buy it because once it goes into all these indexes, all this money is going to go in and short the stock because it's overvalued, and you're going to lose. I mean, that's obviously not the case on the first couple of days of this thing. You got to sell newspapers or you got to sell websites. Sometimes I think we just let these headlines get in the way of a good story. SpaceX is a great story. The war being resolved, or what you call it, the conflict, what do you want to call it, is a great story. No fighting. Maybe, will the new regime help the Iranian people? It doesn't sound that way. It seems right now that the truce is much more about looks like the Republican Guard are going to have a very heavy hand, and the mullahs much less so, but that's today. Let's see how this ultimately shakes out. It does probably mean that Iran's not going to have a nuclear weapon anytime soon, which was supposedly the reason behind all this. I'm not getting into those politics. What we didn't get was regime change. What we didn't get was an uprising by the people who live there. What we got was the current folks in power had to back off because we were getting bombed to the point of maybe being put out of their misery, and they're willing, it sounds like, to accept no nuclear weapon to be left alone. I think that's the end conclusion in this thing. What does it mean for all of us? No more bombs. The men and women of the military probably leave fairly soon, and ultimately the price of oil goes back and down into the 70s. That's what it means. Not a big deal. What does it mean for markets? Ripping higher. And why do we care about that? Well, obviously that's what this podcast is about. But certainly, when you think about the ultimate goal here, did we, from a world safety standpoint, make the world safer? Let's hope so. But there's certainly the conflict right now is resolved and the market's reflecting it. When you look right now, are you ready for this? Before today, the S&P 500 is now up a whopping 9.15% for the year, 14% for the quarter. The Dow, 7.36%, up almost 11% for the quarter. The Russell 2000, remember, we're very bullish on small cap stocks this year, knocking the cover off the ball, the second best index so far in the year. And that is a whopping 19.2% of the year. For the week was up 4%, 18% for the quarter. Let's just go down the list here. Growth stocks, because a lot of the growth stocks in general don't have the Magnificent Seven in them or Magnificent 10 now. It's only up 3% on the year. That's a laggard. Value stocks up 15, almost 16%. Value is the winner in the large cap space this year. Apple's a value stock, not a growth stock anymore. What is the number one stock in the world, index in the world? Emerging markets. Why? Because South Korea is booming. Why is South Korea booming? Because it's a tech country. Why? Because they make chips. So in the same way you did well in probably Micron Technologies, you did well in emerging markets. International is still doing fine. The same as the S&P, up 9.28. Another great number. The bond market, well, hold on to your hats, everybody, because the bond market is going to get interesting. We're only up 0.35 on the year, but we're still getting about a 5% yield. So that means bonds have lost money for the year and their price because interest rates have gone higher, but they're still paying a nice yield. However, if I'm looking at the current moment, just right in the here and now, the 10-year U.S. Treasury is down to 4.45. That means the price of bonds are going to go up as yields come down. And if this thing all gets signed off and there's no headwinds in the way, and Kevin Warsh gets what he wants, a slightly lower inflation, the new Fed chair will meet this week and we'll have more notes about what the Fed's thinking. Assuming that all comes together and bonds go down, we may have a scenario where a balanced account could have one wonderful year. Why? Because you'll probably make probably, no, you never know, assuming I'm right that inflation cools down now. Inflation cools down, the prices of bond go higher and interest rates go lower. In that scenario, you'll do well in your bond portion of the portfolio, and you're already doing real well in your equity portion of the portfolio. So it means a balanced account could have one of the best years in a long, long time. So I guess I want to wrap up this week by saying, like we started so many times on this podcast, never let the headlines scare you from investing. Let's learn about SpaceX and these other trillion-dollar companies together as this changes the way we've seen things in the past. Don't let the scarce the worry about higher oil make an impact because I just looked at credit card rates and auto loans. There's not enough borrowing going on right now. Credit card companies are worrying. But why? Because they're not seeing people take on enough debt. Because I guess they're worried about their job. The job market's still healthy. Last time we had job data, it was still very good. So the job market's healthy. The consumer's not over in debt. Well, inflation now should come back down somewhat meaningfully. And you've got quality American companies making a lot of money. I hate to say this, but what I thought was going to be an average year is turning out to be better than an average year, in spite of a war and higher inflation and higher oil prices. Kind of way things work. If you keep it to the facts and you don't let the facts get in the way of what the headlines try to do to the facts, or the other way around, I'm saying it wrong. You don't want you don't want the headlines to deter you from really paying attention to the facts. You could do really well by investing. I often meet so many people tell me, they buy a house and they make their money that way. And I had a guy tell me yesterday he wants to take the equity out of his home and go buy some physical property. And I say the same thing I always say. The most powerful way in the world to create real wealth is the stock market. And I just think sometimes folks lose sight of that because they all want to see something. They can't touch it. They can't feel it. They can't see it. So they don't believe it. Most of the stock market is owned by the top 10% of Americans. That makes me angry because I think this is the best way to create real wealth. And right now is living proof of it. Strong U.S. economy, strong employment, modestly lower inflation. It's going to come down over time. Earnings growth have been excellent and cutting edge, innovative American companies. Think about that for a second. You have the most advanced companies in the world. I read a piece over the weekend about Switzerland and why this is important is because the Swiss are in a weird place. They actually won a soccer game last night. They haven't won one of those in a while. I'm a big World Cup soccer fan. I haven't mentioned it, but I'm a huge World Cup soccer fan. I'm a huge soccer fan, but watching the Swiss win for the first time in a long time. The last time they're in the World Cup was the last time it was in the United States, by the way. But they've got a population issue. They used to have one out of every five citizens was an immigrant. Today it's one out of three. And there's real pushback. 45% of the population wants to cap the size of their population, not allow anyone else to come in because they don't like that housing is tight, job market is tight, and there's just, new people in the country that are not following the Swiss traditions. A little bit to some degree like the United States. But yet, immigration is a very powerful economic stimulant. And when you look at that scenario, they had to go to a vote and they voted to actually not put in a cap on their population and allow more immigrants to come in. Why I mention all that, literally little countries like this are struggling just to keep their population growing. Italy, I love Italy. The soccer team's no good because the population is shrinking and they don't have any real immigration. If they do have immigration, it's not people going to be playing soccer. And the Swiss are faced with the same thing. What does the United States have in its side? We have population growth, other than this year, assuming we're going to fix that. Well, we get immigrants still, but our size and is double the rest of the world, and the growth. Well, double, we're the biggest country in the world, and the next closest country is China. We're double China. But you think our demographics are good, our economy is good, and we have the most cutting edge creative countries in the world. So forgive me for getting my soapbox, but when I see all these goofy headlines about how when SpaceX is going to go into the index, it's going to lose money. Nobody knows that. No one has a crystal ball. I do worry about being diversified. And we worry about, whether or not if you're in an index, is it no longer a diversified index? So we got to be careful. We're going to talk a lot about that in the months to come. But for today, it's hard to see any black clouds out there. There just isn't. And let's not make this political. I mean, you might hate President Trump, you liked him, whatever. There was they celebrated his 80th birthday. They had a cage fighting match on the White House lawn. Maybe you hate that idea. Maybe you like that idea. His name's been taken off the Kennedy Center, but the wishing pools for the Lincoln Memorial now cleaned up. Maybe you hate that. Maybe you love that. I don't know. I don't care. My job is to help you make money based on what Washington does, not whether I think it's wrong or right. But right now, it's hard to argue with the state of the U.S. economy. And if inflation comes down, this means it's going to be very good for all Americans. Let's see if that happens. But certainly for markets, it's been whoa. We're in a unique place. Normal and valuations, by the way, are not terrible. With a solid earnings growth, they're actually expensive, but not terrible. All right. A couple fun things to wrap us up. It was an interesting, fascinating week. Hopefully, I try to lay this out for you. I did create a little video on SpaceX if you want to learn more. That goes into more in depth than what I talked about today. But just a few fun headlines. First off, how many of you have a Roomba vacuum cleaner at your house? Now, this is a new one on me. I read a piece over the weekend that talked about that people name their vacuum cleaners and they like their vacuum. That's the one that drives around at night when you're not looking. My friend Jamie, who lives at the beach, I believe, has one, and I think she likes hers. It picks up, she loves her Roomba. She just said that. Now, people name them and they take them on vacation with them because they become so affectionate with them. Well, Roomba has decided to create a new robot. And this is amazing. It's called the Familiar. And the Familiar is a robot dog. And the reason why they did this, because years ago, there was a robot dog called AIBO, AIBO. It was in Japan. It was made by Sony. And eventually, when Sony shut it down, people were so upset about the dog no longer working that they had funerals for these robot dogs. Well, the Familiar is a robot dog, but it's an AI robot dog that's connected to the internet. So it's going to follow you around your house, learn your mannerisms. It's got like furry legs and it's got a soft exterior. It'll have expressions. It'll make like cute little quipping sounds, from what I understand. It's very affectionate. It'll try and drag you off the couch, get you to move and go for a walk if you've been too sentiment. So it's a dog that'll quiver and have kind of loving eyes and all the things you get out of a pet, but it's a robot. And it's going to connect to the internet and it's going to gather your data and it's going to learn what you like and it's going to appeal to you. So you're going to fall in love with a robot dog. And that they think many people will begin to have robot pets in their house because it's easier to maintain rather than a living animal. Okay, everybody. I keep talking about getting ready for what AI is going to do for us, but I mean, who knows? Maybe in 5 years' time, maybe in 2 years' time, maybe in a year's time, maybe the hottest Christmas gift of 2026 will be the Familiar by Roomba. So you can have your vacuum cleaner by them and your own dog in your house. We have two little dogs at home. I don't think we're ready for a fake dog just yet. All right. And then finally, shout out of the week. Yeah, this is an easy one. Actually, I have two. In fairness, I have two. I shouldn't be doing two. I've been doing two. The first one, I got to keep it a little bit too. I lost the piece. I cut it out. And no, I'm going to skip it because I can't remember his name. I had it all lined up for me. I go, oh, what do I do with it? Oh, there he is. I got it. Lee Raymond. I was going to get the last name. Lee Raymond was the person who turned Exxon around. Exxon is Exxon today because of Lee Raymond. It made it obviously one of the biggest petroleum companies in the world. Very, very much an oil company, but they do a lot of cutting edge stuff in liquefied natural gas and alternative resources, and have made a commitment to being carbon neutral by 2040. So I think Lee Raymond, to his credit, building what we all grew up with, knowing Exxon as the powerhouse of the oil industry. I think there's something fun about that. But the other one I got to give, which is much more exciting. First off, it's World Cup time. So kudos to everyone who's into the World Cup. How about the United States men's team going out there, crushing ground game one? That's a big win because the number of goals you score will matter if they get into a tiebreaker. So they scored a bunch of goals. Imagine they scored more goals in that game than they did in all the prior World Cups of the last go around. So good news for them. But that's not my shout out. My shout out is the New York Knicks. And I'm not a huge basketball fan. I enjoy basketball. I played a little bit. Don't love it. Never a sport I loved. But there was a lot of euphoria around it. I did catch a few of the games, and really the shout out is Jalen Brunson. And if you read Jalen's story, he's your classic hard knock story, and that's why he's the shout out of the week. He's not the tallest guy. He's not your classic, sort of Steph Curry makes shots from anywhere on the floor, though he's becoming that. But he went to Villanova, which if you're from our area, Villanova is a big deal. But he seems like just a very straightforward guy. And if you didn't catch the interview that he gave with his father after the game, what he said is what made him my personal shout of the week was that nothing is given to you in life. The reason why it worked out for him is because he never stopped working hard. He learned from his coaches. He had great mentors from his parents, his father specifically, to the coaches that he had. He worked hard every single day. He believed in all the cliches of get up, work hard, and good things will happen. There is no such thing as luck. The harder you work at it, the more success you'll have. And to his credit, I don't think he's the greatest basketball player we've ever seen. He's a quality guy. He can make a nice shot, but he's got a never quit attitude. He's gritty, he's gutty, and he led the Knicks to a championship for the first time in, I think, 53 years, which for New York City, which we've had one heck of a long drought, any kind of titles, that's a big deal. So shout out to them. And by the way, for the Hurricane fans out there, I like hockey as well. Good for them for winning the Stanley Cup. They haven't won since 2006, so I hate not mention the Hurricanes winning as well. But Jalen Brunson, the man of the hour, as said in the paper this morning, he's now the king of New York. I think that's pretty cool, and justifiably so. Have a great week, everybody. I hope this is a little longer than normal. There was a whole lot to talk about. Hope I didn't bore you to tears, and hopefully today got you guys taught you something new about the new world that we live in, whether it's a robot, SpaceX, or the New York Knicks. Thanks, everybody. Have a great week. Bye bye.